Welcome back guys to another Zero DTE video, and today Ernie's going to talk about optimizing flies, so make sure you stay tuned for that. If you're interested in becoming a pro trader, check out the link in the description to Ernie's course, and as always, enjoy guys.
So you're going to get some first class education here on how to manage a fly. So we'll make a matrix. We'll say, okay, we want to divide the day up. First of all, let's take a look at premium and the way it behaves over the course of a day. Let's say that this is the open, then this is the close. What we do is we split up the day into 3 segments, and those segments get progressively smaller because to represent the decay that happens in the market. The first segment we would call the morning session. The second segment we would call the afternoon session. And then the third segment we would call the closing session. Now, if we were to take a look at the premium that we're trying to collect in that fly, how it behaves, how fast it is going. In the first part of the day, it's kind of doing this. Second part, it's starting to dogleg. And the third part, it does this. Now you can see why we split this up into 3 segments, morning, afternoon, and closing, because the rate of decay is unique in each one of these segments. Here it's flat, here it's doglegging, and here it's falling off of a cliff. So that means that we have to have 3 different ways that we would adjust our attitude to price. More specifically, because of the rate of decay here, it basically means that we need to become more sensitive to price movement as we get closer and closer to expiration, or tighter with our hold or fold decisions. So that's the first dimension, is time. The second dimension is where we are. So if we were to take that risk graph again, we break this problem up into 3 segments. And we go by the break-evens. We have one break-even here, and another one here, and another one way out here. And so if we were to draw lines going straight up, we could say, okay, we have 3 different areas. We have zone 1, zone 2, and zone 3. Now, zone 1 and zone 2 are going to vary because over time, this zone 2 is going to close up as premium decays. So now this will be the new zone 2, but it's still zone 2. And it's a way for us to identify where our trade is. So how we treat things in zone 1 or zone 2 or zone 3 are also going to be slightly different depending on what time of the day it is. So now we have this kind of matrix. We have the morning, afternoon, close, zone 1, zone 2, zone 3, and then we just make decisions in each one of these places. How do we act? Well, in zone 1, there's not a whole lot to do. But these decisions that we're making here are buy and hold decisions. So for instance, right now, we are in the closing session and we're in zone 3. Do we buy or hold? And we ask that same thing in all of these. Now, usually that decision making is going to have some sort of criteria around it. So for instance, we will decide what our tolerance is. Do we have a 25% tolerance of whatever high point that we've reached? Do we have a 50% tolerance, 100% tolerance, 10% tolerance? Typically, when we're in here, when we're in this closing zone 3 here, we have the least amount of tolerance. So we might have 15 to 20% tolerance. So what does that mean? That means that if we were in this trade and we're sitting right here at the center strike and we have $2,900 of profit and our tolerance is only 15%, well, now it's at $3,000 of profit. Let's take $3,000 and multiply it by 15%. What do you get? You get $450. So that means that we would get out as soon as price moved over, we had to give up $450. So as soon as it moved to here, we would have been out. Now it's moving all over the place because we're getting near the end of the market and volatility is going nuts. So instead of taking home $3,000, we would take home $2,550 if it moved out here. Now, if we waited all the way out to here, then we're giving up about 70%. We wouldn't do that. So when we're getting late in the day, our tolerance is very little. When it's very early in the day, our tolerance is much wider. And that width will always allow us to give it enough room to grow, but not enough that we would lose money or significant money. And you want to give it that room to grow because the more room you get it to grow, the more chances are that you'll get into or close to this profit tent if that's where the market wants to go that day.
Thanks for watching guys, I hope you enjoyed the video, and if you did, make sure you hit that subscribe button and hit the like button below. If there's any questions that you might have for Coach Ernie, make sure you leave them in the comment section. Thanks guys.